Are you feeling caught between the insane roller coaster of cryptocurrency and the slow, steady drain of inflation on your savings? Well, today we're digging into an idea from investor Peter Schiff that tries to solve that exact problem. It's called digital gold.
So here's our roadmap. First, we'll break down the crisis that's hitting modern money from two different sides. Then we'll dive into what digital gold actually is and how it even works. After that, we have to tackle the biggest hurdle, the trust issue. And finally, we'll ask the big question: could this really be a safe haven for your money?
So let's start with the core problem here. If you're an investor today, you're kind of stuck between a rock and a hard place. It's like you're in a financial tug-of-war with two completely different kinds of risk pulling you in opposite directions.
On one side, you've got cryptocurrencies, like Bitcoin. Sure, they're exciting, but they're incredibly volatile. They act more like a lottery ticket than a stable currency. Then, on the other side, you have your regular, government-issued fiat money. Dollars, euros, you name it. And the problem there, it's constantly, silently losing its purchasing power year after year thanks to inflation.
Okay, so this is exactly where Peter Schiff's concept of digital gold steps onto the stage. The whole idea is to try and give us the best of both worlds, the historic, rock-solid stability of gold, but with all the speed and convenience of a modern digital transaction.
Now, it's absolutely crucial to understand this. This is not about creating some new magic internet money out of thin air. Not at all. Each digital token is basically a title deed. It's a direct claim on a specific amount of real, physical gold that's locked up tight in a secure vault. Just think of it like a digital receipt for an actual, tangible thing.
But you might be asking, how do you actually turn a heavy, clunky gold bar into something you can just zap across the internet? It sounds a little like magic, but let's break down how it would actually work.
It's really a simple three-step process. First, you take your physical gold and deposit it with a trusted, secure third-party company. They're called a custodian. Second, that custodian issues digital tokens back to you, representing the exact amount of gold you've put in their vault. And then, step 3. Boom! You can now use those tokens just like digital cash. Send them, receive them, spend them instantly.
And you've got to realize the implication here is massive. Just imagine trying to send the value of a gold bar from New York to Tokyo. Instead of dealing with armored trucks and crazy shipping costs, you just send the digital token. The transaction happens in a flash, and the ownership of that physical gold changes hands immediately.
This really shows how the system could bring a centuries-old store of value crashing into the modern economy. Because these tokens can be divided into tiny, tiny fractions, you could theoretically use your vaulted gold to buy something as simple as a cup of coffee. It's a direct exchange. You get your coffee, the cafe gets a token backed by real gold.
Of course, a system that sounds this slick and convenient really hinges on one single, critical component, and it's also its biggest challenge. That component is trust. I mean, who exactly are you trusting to guard your gold?
And that's really the million-dollar question, isn't it? If you're not physically holding the gold yourself, how can you ever be 100% sure that it's actually there, safe and sound?
Well, the argument for this model uses a pretty simple analogy. Insurance. We already trust third-party companies with our life, our health, our homes. The thinking is that in a competitive market, different custodians would fight to have the best reputation for being the most secure and trustworthy. Their entire business would depend on it. And let's be honest, for the average person, it's a whole lot safer than trying to hide gold bars under your mattress.
So let's pull back and look at the big picture. Where does digital gold fit into the future of money? Well, it's not being pitched as a get-rich-quick scheme. No, it's positioned as a modern tool for one thing: wealth preservation.
The prediction here is that eventually the speculative fever, the hype around assets like cryptocurrencies, is going to break. When people get tired of the volatility, when the bubble finally pops, they're going to start searching for something more stable, something real.
And this, right here, is the fundamental difference in philosophy. For so many people, the goal of crypto was simple: get rich quick. The historic purpose of gold has always been the exact opposite: to prevent yourself from getting poorer over time.
Digital gold isn't about chasing those massive, crazy gains. It's a defensive strategy. It's a way to protect the value you've already created from the silent erosion of inflation, which is constantly devaluing the traditional currency sitting in your bank account.
So as we wrap this up, it really leaves us with a crucial question for the future. In a financial world filled with speculative bubbles and currencies that lose their value, where are people going to turn for safety when things get turbulent? And could an ancient, old-world asset, just dressed up in a new digital form, actually be the answer?